Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It is Monday, March 16th in the morning, pre-market, and a very dark and gloomy day here on Wall Street. Kind of like a light rain. And yeah, the weather's not really great around these ways in the March timeframe. Usually windy, chilly, but not freezing. But we're gonna have like a week or two of very cold weather. It's gonna suck. It was 2 days I didn't come on this show, and I like that where I come on like a Monday and talk to you guys, and maybe and hopefully a few days this week. But then I take a break on like a Saturday, Sunday. Not that I'm being lazy. I think it's just a healthy break. I can't believe people that do these daily podcasts every day, like the old Scott Adams and other sports betting podcasts I listen to. I mean, these guys are relentless, and it really makes you appreciate how hard those guys work. It's mentally exhausting to try to do an everyday podcast. So I like the Monday through Friday idea. I'm going to try to do that. Of course, nobody knows about this podcast yet because I just started it. A lot of my followers are my subscribers on Substack, which is the Rigatoni Capital Substack, which I have been posting now for longer than a year, at least maybe a year and a half. And I have people follow me there on Substack, and nobody really watches this podcast yet. So hopefully people will eventually watch it, and please subscribe or smash that like button on YouTube just so maybe I know that you're actually listening because I'm talking to a computer. I think nobody's listening. This morning, we got definitely more of a healthier look to the markets. Pre-market WTI is trading at 95. A lot of positive news came out just within the last few hours on, like, I guess NATO and US allies work on reopening Hormuz after Trump pressure, and some information on oil going through pipelines or something. This really has always been this really always has been an oil story, the Iran war. So at least the algos think so. So if WTI trades over 100, the markets sell off pretty hard, and if they come back down, you see a bid come in for like the Nasdaq and Bitcoin, and you almost see like gold sell off too, like as if that was the safe haven play, which it was. So anyway, wanted to let you guys know also today is Nvidia GTC. That's really important to note. We got an important week here with the Fed. They meet, and they'll likely just hold rates in the middle of this week. And then today is the first day of GTC, where I'm surprised that's not on the front page here. Here we go. Technology. Can NVIDIA's dominance survive the sea change underway in AI computing? And we can discuss that briefly on how he'll probably come out with the new chip that nobody really knows about yet. We've only heard hints of it, which is working with someone like Grok. That's with a Q, not with the K, like Elon Musk's company, and how there's this new chip that does inference and training, right? So he can kind of show customers that, yeah, we have this type of chip now, and we're the best at it and all this stuff. So that will be today, March 16th. That'll be his first opening, the big opening ceremony. Jensen Huang does the keynote speech for that. And that'll be in the morning, actually. I think it's at 11 a.m. my time, East Coast time. So I'll be watching that, and then I'll come back on Tuesday, and I will do a podcast kind of going over what I watched. I'll watch it tonight after work, of course, and I'll take notes, and we can discuss it tomorrow. This morning, I have a new post out on Substack. The title is "The Next Defense Industrial Revolution." The idea of the post is I got inspiration from the CTO of Palantir, Shyam Sankar, and he goes through like what he would suggest, what he sees in the defense manufacturing space here in the US, because that's Palantir's customer base now, this enterprise industrial business that happens to be industrials, And for example, like Lockheed Martin is a Palantir customer, right? And it helps pretty much helps them have more of a decision making. And I go into like explaining the ontology of Palantir and how someone like Lockheed Martin may have been using like Excel spreadsheets for like some of their decision making. And Sankar goes through all of that in this long podcast that he did last week with Invest in the Best. So it gave me inspiration because he talks about like the Last Supper. The Last Supper was in 1993. It was the CEO of Martin Marietta, which Augustine, Norman R. Augustine thought of that name. It just popped into his head during an interview. But what it was the Cold War had ended 2 years ago, which was in 1991. And in the summer, they had come together for a meeting where they said, Washington, D.C. pretty much said, and the Clinton administration told them, like, we can't keep going on with these type of law this type of budget, and the budget had already been cut significantly since the Berlin Wall collapse. So what he was trying to say was, what they were trying to tell these companies were like, look, you either need to consolidate or you're going to go out of business. There's going to be no government bailouts. And that's when you saw all these large defense manufacturers kind of absorb each other and become into what we can call like the five old defense manufacturers that we see today. I'm just going to give you the examples like Lockheed Martin, Northrop, RTX, which used to be Raytheon. And these absorptions and M&As were happening all the way up till like last 2 years ago, 3 years ago. If you recall, the last big one was Raytheon and United Technologies. And before that, it was United Technologies and Rockwell Collins. And these five old school defense manufacturers, the point of the post is to say, like, hey, these five companies need to get their shit together. And we know the Truth Social Trump post where he says, like, if you can't make weapons fast enough and you can't make these carriers and jets fast enough, no more stock dividends, no more share repurchases. Like, that was his way of trying to get them to get their shit together. But a lot of it has to do with input, I mean, raw materials and refined rare earths, and like to get the actual product, the supply chain issues, to get the inputs to build what they want to build. And these companies get almost too large too, and like bureaucratic, and half of their money spent on lobbyists in DC trying to get Republicans elected or whatever it is. And we run into this problem where we're not solving problems anymore. We don't innovate anymore. And pretty much someone like China will just copy our innovations anyway in the defense manufacturing space. And how do we get back to trying to fix all these problems? And that's what the Palantir CTO, who's been at Palantir for 20 years and works with these companies directly, that was he has a good insight on the problems at these large old school old economy type of defense manufacturers. So what I was trying to say was like, how can we fix it? Well, for one, use Palantir, integrate an AI software type of business to upgrade your business so it can run as if it's a software. If you find a problem or a bottleneck in your defense manufacturing space, like if you have some kind of supply issue, it should almost be like you're getting an update on your Apple iPhone overnight, and it just fixes the issue. Or when Meta sends out a update on their app. That's the whole idea from what I understand. And I'll have on too, who's familiar with the ontology of Palantir. He's on Substack, by the way, under newsletter Alpha Monk. I'll have him on this podcast to explain to me a little bit more if I'm understanding it correctly. But it's kind of like you have an update on your phone overnight, it gets resolved, the bug gets fixed. That's kind of like the idea that I think of as Palantir being integrated in these old school, old economy, industrial type of businesses, like a Lockheed Martin, right? And if those type of companies are not using Palantir correctly and they're not, I guess, embracing something like a Palantir, that's one problem. And then I go into like some other issues here, like you have to understand that Anduril Industries, I always say Anduril wrong. Anduril Industries, that's what it's called. I was going to say Anduril Technologies, but that's Palmer Luckey's company, Amaral Industries. Palmer is the same kind of mindset where a lot of his development of autonomous systems goes hand in hand with like, some kind of like software mind. And it also has a software component to it. Anduril is obviously private, so we don't know. I don't know a lot of information on it. I find it a very fascinating company. Obviously a really hot company, and we'll talk about that later when we go through my notes here. Anyway, I better shut up because I got to get to work. I'm not going to be able to finish this if I keep talking about my post. Let's see here. Yeah, briefly, I just want to note that it would be on the rate decisions on Wednesday. I'm switching back to the Federal Reserve now. The rate decision would be on Wednesday. And we know that they're going to hold rates. We can, and it's Jerome Powell's last hurrah before he leaves. This is his last speech, probably. Hey, maybe he'll cry and get emotional. Nvidia, we know that they have. What I wanted to find out more information was if I were doing this full time, which I would love to do, be a professional investor. That's everybody's dream. I would have gone to the GTC because I'm curious what goes on after NVIDIA's speech, because I never hear anything after NVIDIA's speech. I never hear anything about Jensen after Jensen's keynote. I want to see the other companies that are presenting. I want to see the other keynotes, not just AMD. I want to see all of them. By the way, Micron will report, ticker MU. Check out that stock if you haven't. They will report later this week, and we'll talk about that briefly. And then people that are trading around NVIDIA's GTC event today are stupid, in my opinion. Sorry, I just don't agree with something like this. This is not for a day trader to trade around. I think it's embarrassing if you do. Or maybe you're like a college kid and you're just messing around on your Robinhood app. That's fine. If it's just like a little, it's kind of like DraftKings for you. You got $20 and you're playing the lottery. That's cool. But if you're 40 years old and you're trading around Nvidia and the headlines on GTC, I mean, that's embarrassing. So I just wanted to show you this real quick. I'm really jumping around today. I apologize. But remember, I discussed the post I put out about the next defense manufacturing industrial revolution. One of Sankar's points were like, these companies just are not like super growth companies. For one, they don't grow revenue like crazy, but this is pretty decent for an old school manufacturer. This is Lockheed Martin I'm looking at right now, but look at the operating margins. They're just not there for an old school industrial. And that is the same. I didn't look into RTX and Northrop Grumman and General Dynamics and L3Harris, but it's like the margins just aren't there. And I think that has to do with a lot of the input costs that have just raised over time. Remember, people cheer when silver's going up because they own a silver bag or they own some silver bars. This is like a problem for this type of company, like a Lockheed Martin. Refined silver is the last thing you want to see that to go up in price, because can Lockheed Martin really pass on those costs to the Pentagon? The answer is like no. And they strike these really large deals years ago with someone like the Pentagon. So, procurement at something like Lockheed Martin's got to be a hell of a problem. It's got to be a hell of a job. And those type of buyers must be really frustrated all the time, especially since COVID and we saw this spike in input costs. And you can see it right here, how like operating margin was at 14.3% back in December 2019, and they've never looked back. It's been down, down, down ever since. Another thing I would recommend back to my post is the contracts for March 13th, 2026. These are the U.S. Department of War's contracts. This is a daily thing now. Maybe it was always a daily announcement, but I'm just showing you, for example, what it looks like if you're interested and you're an investor in something like Lockheed Martin, or maybe you're a private equity investor and you own some Anduril, millions of dollars worth of Anduril. I don't know if you can own less than that amount, but you have a private equity ownership. You have some exposure to Anduril Industries. or you have a drone company, or you're in the drone industry or whatever, this is the place to go. It shows you all the contracts that the US Department of War is making with these companies. Boeing's listed here. Anduril was listed here. We'll talk about that in a moment. Raytheon Company has been awarded this and that. The Navy awards this. The Army awards this. It splits it up, I guess, between the Navy, Army, and Defense Logistics Agency, and then the Defense Information Systems Agency. Like, for example, they awarded AT&T Corp with something here. So I kind of forgot about this page. I don't really pay attention that much, but the whole point of also me showing that was the big splashing news over the weekend, which came out on Friday. For people that look at this US Department of War contract that comes out almost every day, Monday through Friday at least, saw that Anduril lands a $20 billion Pentagon contract for modern battlefield hardware. 9 days after Palmer Luckey's Anduril was raising around $4 billion at a $60 billion valuation led by A16Z and Thrive Capital, Luckey landed a major enterprise contract with the U.S. Army worth up to $20 billion over 10 years. So that's important. The deal features a 5-year base period with an option to extend for another 5 years and includes over 120 separate procurement actions. The contract centers around Anduril's proprietary open architecture AI-enabled latest platform. So, and then also they show what Anduril makes for the US government and how it's used. And it's all autonomous, maybe more or less expensive type of weaponry, arguably in context versus something like an F-35, but they show you like the counter, it's called a counter UAS counter drone system, and an autonomous aerial systems such as the Ghost and Ghost X. I'm familiar kind of with those. And then it shows you autonomous underwater vehicles, AUVs is what they're called. So those type of autonomous type of weaponry, and yeah, the drone type of business, but look, they do it underwater too. It's really cool. I just find this stuff really interesting. Of course, I wish I was an Anduril investor. My boy Saquon Barkley is an Anduril investor. It's not really fair that the rich and famous get to invest in these type of companies. And yeah, I just don't have that type of capital. I'm not in that world. And I guess it's almost a good thing, right? Because we would have definitely got hit with this private equity issue that is going on right now, especially in the software type of businesses and stuff. I mean, there's some serious, that's some serious shit. If you had exposure to something like the Harvey Law software company, it was an LLM for like lawyers. I wonder what's going on with that private equity company. I mean, because something like Claude has definitely scared the living shit out of those type of investors, right? All right. There's a post here as well. As you guys will notice that I find a lot of my news information from Zero Hedge. And it's not that I'm a doom and gloom type of person. It's not that I'm a conspiracy theorist. It's not that I'm a right wing nut. Zero Hedge has like the most up to date, best news information. And of course, I really try to pride myself on distinguishing when they're being doom and gloom or when they're being too political versus the actual news details I'm getting. So that's kind of like why I started this podcast, was to try to tell you to call something bullshit, to call a headline out bullshit, but more so just in general in the finance world, where like there's fake news in the finance world as well, and not just political news, of course. So anyway, this post is titled. So anyway, I like Zero Hedge, and I subscribe, and I recommend anyone that is a investor subscribe to. I really think you get a lot of information all together in one piece, because you get the opinions from the Goldman Sachs guys and the Morgan Stanley guys. They will also guest write and stuff. And you get, instead of having to go on to their presentation, Zero Hedge is just taking snapshots of it and putting it all in one post. So it's just an easy place to go, like a one-stop shop for me sometimes. But of course, they have like that theme of being doom and gloom or whatever. So, Iran war exposes America's unfixed supply chains is this article that came out 2 days ago. And kind of just a great article. I'm not going to read it right now because I got to go. And I don't think you guys want to be read to, but there's definitely this rare earth issue, and we really need to start fixing that problem here, the refined rare earths issue. And we need to make sure that we're not so exposed in the future. I mean, we learned our lesson during COVID 2020, but like we didn't really fix it. Like we kind of like wanted to fix it at that time, and we learned we felt like we learned our lesson. We apologized, and then we started to get comfortable again. And this Iran war is an example of exposing that we just haven't fixed those supply chain issues, and that goes to the pharmaceutical end. That obviously goes to something like a fertilizer end, but it's more like this refined rare earth issue that I'm concerned about, and I think the whole Western hemisphere is really concerned about because China has all those refined rare earths. And remember, everybody has rare earths. It's just who's able to refine it. It can take many years to figure out how to refine these. It's a big investment. It's a big process to refine the rare earths itself. And something like the US administration panicking and taking a stake in MP materials, I don't know how that's going to work out. I don't know if it was even a good thing that the US took a stake in MP materials, but it's a small stake. It's about 10%. You can listen to Howard Lutnick talk about it all you want. I mean, that guy drives me crazy, but he explains why it's not that big of a deal and the relaxed guys. But you don't want government intervention here in the US, especially with something so important like refined rare earths, but maybe it was the boost that they needed. So there's positives and negatives to that MP materials, and that's ticker MP if you want to look into that more. What came over the weekend was that Meta plans 20% layoffs to divert capital to data centers. This is not official, from what I understand. It hasn't happened yet, but it looks like it's probably going to happen. I think we can go through Oracle. It's a little unclear to me, and if you guys know, let me know if Oracle did do this big job, massive layoff, or if it was just a discussion or rumors. And then, of course, we had, I keep saying the name wrong, I'm sure, Atlassian, which is ticker team, had a small little layoff there of 1,600 employees. I guess in context, that's not that small, but in the world of these large headcount companies, that wasn't too bad. And then we had Block, right? And we might have another tech company that I can't think of, like a Palo Alto or something. I heard had some layoffs as well. So this layoff thing is definitely happening now, and it's very shocking to see Meta would plan 20% layoffs. I mean, that is really shocking. That's a huge number. But someone will argue that on the other side of that and say, well, these guys really overhired during 2021. And I guess a theme of the Rigatoni Capital podcast has been like two things can be true at the same time, or the truth is somewhere in the middle. And I've been saying those two phrases almost too much, so it sounds cheesy at this point. But I think that's kind of like almost the theme here. But I can't give you another example of when I have said that on this podcast. I'm drawing a blank right now, but I say it all the time here. And I think it's kind of like I'm noticing that's a thing that's true when it comes to finance stocks. Like there's this doom and gloom case, like massive job layoffs in tech due to AI disruption. And then there's somebody that says, like, no, this is going to actually spur new jobs and innovation and this and that. And it's going to help our GDP. And my argument is that the truth is probably somewhere in the middle, and the people that argue one side or the other, they're almost like getting confused with the stock market, which is being a bull or a bear. But sometimes in investing, because we're not trading, you can be somewhere in the middle, and the truth can lie somewhere in the middle. So when people get heated, sometimes I go on the investing or gambling podcast over the weekend, which I went on this Sunday, and the host, who I love and is a dear friend of mine, will get heated because something is being challenged. or even I get heated because my investing thesis is getting challenged and I get all flustered or he gets flustered. But really, sometimes it's just not that simple. It's not a yes or no answer. It's not a bull or bear case. It's an actual, the answer is somewhere lying in the middle. I think that's really important to note. Earnings whispers, we have Micron, which I'm interested in, which comes on Wednesday. I don't own any of these stocks that are reporting. And I should let you know that the Rigatoni Capital portfolio has not made any moves since the Iran-US war. Haven't sold anything, haven't bought anything, haven't added anything, haven't trimmed anything. So it's not that I'm frozen and not sure what to do. I just don't see a lot of value there in when the indexes don't correct. And they really have not corrected. The S&P was only down 5% at the lows. That's just not enough for me to get excited. And yeah, there are some stocks that have gotten destroyed and there are some opportunities, but I mean, I'm fully invested. Why do I need to always buy when a stock looks to be of value? Sometimes it's good just to chill. And like the Freedom ETF, which I always talk about, I didn't add any there. I was interested. American Express and Goldman's, I didn't add any there, but I was a little bit interested in their pullback. Why won't this work? What else here, guys? I mean, something like Spotify, for example. I feel like I missed this where it traded down to $400 a share and it bounced so strong because it had a nice earnings. I mean, I love Spotify. I just think that a lot of these stocks are like once in a lifetime entries, and you have to really pick when you enter. Unless you're doing a dollar cost averaging type of system, like you're buying the S&P every week, like that's different. I'm talking about the Rigatoni Capital portfolio. That's a whole different story. Even the ITA, which is what I've been paying attention to and writing about so much, is the defense ETF. Even that had a nice little sell-off, but it wasn't enough for me. And the QQQ is barely down. Look at that chart. That looks ugly to me. I mean, it's not something like TransDigm. I already own it, and I think that TransDigm is a buy, but I'm being cautious. I don't know how many more times can I add to my TransDigm position. I guess if I were an institutional investor or if I had more cash sitting on the sideline, yeah, I would be buying TransDigm here. No, not financial advice. Remember, TransDigm's only like 1% of my portfolio, but these are the type of stocks I like. I'm a Bitcoin bull. I already own Bitcoin. I don't need to add more. Jack Mallers would tell you the dollar cost average, which I do recommend in the Strike app, not financial advice. But if you're a Bitcoin believer and you want to support Bitcoin, yeah, doing the dollar cost averaging in Strike is a great way to get exposure because it adds up over a long period of time. You're like, holy cow, I got a half of a Bitcoin now. I was only putting this much in once per week or every 2 weeks or whatever it is, and you don't get charged a fee when you use the Strike app. All right, I got off a big tangent there. And then here is Peter Mullock of he does the show with Charlie Bilolo. I can't remember the show, but it's really good. Big tech and bear market territory. This was as of March 15th. Amazon's down 20%. Tesla's down 22. Meta's down 23. From the highs, guys. Palantir's down 28. Netflix is down 29%. Microsoft down 29. Oracle down 55. So what are you going to do? If the QQQ hasn't sold off that much and the S&P hasn't sold off that much, I don't know if you need to cherry pick the bottom on these type of companies. I would have exposure to these companies. Tesla, I don't own, but I own Amazon. Individually, I do own Amazon, Meta, Palantir, Netflix. I actually own Oracle too. I sold Microsoft last year because I was scared shitless of what the heck they were doing over there with OpenAI and why they were depending so much on an OpenAI. But yeah, I mean, there has been a broadening of the market. These companies are unpopular at this moment. Give it another year. These stocks will be hot again. I mean, even if it's a few years, investors will come back to these stocks. I guarantee it. Well, I don't guarantee anything, but I definitely feel confident owning these companies, even though people that are really smarter than me say that these stocks are like dead. So I still think you need exposure to them. Last thing I want to end on is congratulations to, was it Cameron Young won the PGA, won the Players Championship golf tournament. And also USA won last night against the Dominican Republic, which was a crazy game. And then, of course, Sinner won the Indian Wells, who's Italian. So two US victories yesterday and an Italian victory. Rigatoni Capital's thriving in the sports world. This post was from March 13th, 2025, a year ago. And it was like I was still new to writing on Substack. But the point was like, I think it was March, so it was before Liberation Day, right? Because that happened like April 7th, but the stock market was kind of selling off, and it wasn't selling off enough for me to get excited and buy the dip yet. So I was kind of in the same situation I was this year. I turned off the financial news that plays on in the background on my TV on Friday, and I watched the Players Championship again. I mean, I have this like theory that when March Madness starts, volatility and volume slows down in the stock market because the first week, those games are on during the day, and young men are betting or they have their brackets, so they have like exposure to something. But the whole point is like it's such a healthy, as a long-term investor, you don't have to watch the market every day. And I think it's unhealthy, even for someone like me that wants to do this type of podcast format thing every day. Even I find myself burned out, like, because I did this during the last 2 weeks and I was kind of getting tired of it because nobody's watching this show yet. But this is a meme here that says, look at the day trader's office and then look at the hodler's office, showing you like the long-term investor, the Rigatoni Capital way of investing is you get to play golf all day and you don't have to sit in front of a screen with 20 screens. But it was just interesting to see what I was talking about. Look, Apple was trading well above a 30 times earnings forward multiple. Did you guys know that this time last year? I don't feel like it's trading that high anymore, huh? So yeah, that was the whole point. But anyway, you guys can find me on Substack under Rigatoni Capital. You can find me on YouTube under Rigatoni Capital, and you can find me on Spotify. I think those are the main ones, and then I guess people still like the Apple podcast format platform. So I'm on all of those, and thank you guys so much for watching, and have a great day. Bye.